trades. Today was Friday, March 24th of 2023. We had several trades we did today. The first one was rolling our naked SPX call options out. So we bought to close the SPX March 31st $4,450 naked call option. We stuck with the same strike price of $4,450. We rolled it out 2 months to May 31st. Let's just take a look at this SPX chart. And here you see our chart of SPX. I felt comfortable rolling this same strike price out. I was trying to get the strike price up. And the reason is that looking over here at this weekly chart, we see SPX has made a higher low here and made another higher low here. And now we see this also made a higher high here. So the thinking is I would like to get it up to this $4,600 area, but we just didn't receive enough premium for that. So I went ahead and just rolled the same strike price out. I still feel like it's a fairly safe trade here. We do have several areas of resistance. For example, we have one right here around 4,200, about 4,200 where this previous high was. Notice that this is also an area that served as support for it back in March. If it pushes through that over the next couple months, then we have another area that should serve as resistance just below our 44.50 strike price. And this area is right here where it reached a high back in August, right around $4,350. Again, we see that's an area that served as support for it multiple times back here in October, and then again right here in January. So we did have to go out 60 days, but we see that as the buyers have been buying over the past couple weeks, the volume has come down. Although the buying volume is fairly strong, it's above average on this weekly chart. So we'll have to see how the next month or so plays out. I like to roll these things and they're about 30 days out or 20 days out. We waited this month. I was hoping to get a nice bounce in the market, which we did over the past 2 weeks. And so that's why I went ahead and rolled that March 31st. That option expires here in less than 10 days. We went ahead and rolled it out today. So we'll see how this plays out. The next trade was in Bank of America. This is a position that went against us with the crisis has been going on all of a sudden. A lot of banks dropped really hard. Bank of America was no exception. And what we did is we bought to close the April 21st $31 covered call option and rolled it down to the April 21st 27 call. And we pocketed $1.15 per share for that. So let's take a look at our chart and see why I did that. Probably easier to see this on the weekly chart. And Bank of America, it's just been showing weakness. It's been doing on high volumes. We know really a lot of traders are selling off on banks. I still feel good about Bank of America in spite of what's going on. I haven't heard anything that makes me feel negatively about it. So we're just going to ride this thing out and collect as much cash as possible, and we'll adjust these trades as the stock goes up or down. But today, the Bank of America, it had another lower low and lower high on this candlestick for today. So just decided that, it's been a rough week for banks, for Bank of America specifically. So why not just roll this strike price down to right at the money? So that's what we did. We rolled it down to $2,700 or $27. And now it's right at an area that served as support for it today. Now, it was still a lower low in this weekly chart. So it wouldn't surprise me at all to see Bank of America continue to come down or even to consolidate over the next few weeks. And that's what we're thinking is if it does consolidate, then this $27 strike price call option, it'll be good to roll out. But Bank of America is scheduled to announce earnings during the next several weeks. So we'll have to keep an eye on that as well. Now the next trade we did was in EQR, the REIT. We rolled the $62.50 call option down to 55. And notice that it's the July expiration. So we had rolled this out to July to get some decent premium on it. So see why we rolled that strike price down. So here we see the chart of EQR. Again, I'm going to go over here to this weekly chart. And the main reason is that, as we see here, this was the area of support that I found back in January, right around this $57.50 area. And so with us rolling the strike price down to 55, the reason is that over the past week, we see that it's broken through that area of support at right around 55, 57.5. You see it held for a couple of days. Now, the past 3 days, it's just made lower lows. And today was right at a little bit of a lower high. But the weekly chart, we do see that the sellers came in and tried to push the stock down pretty hard today. But at the end of the week, buyers came again and did buy it back up. But again, we're doing a situation where on this weekly chart, we have a lower low and a lower high this week. And it did on pretty high volumes. That high volume this week, it could have been partly because buyers came in and bought it up. So we'll just have to see how it plays out. Notice that whenever EQR does come down, it has these nice long legs. Sometimes it tends to trade sideways for a while. So that's what we're kind of counting on, is if it trades sideways for a while, then this may end up being a trade that works for us. We do have a long way to go with this expiration. So we'll just have to see how this plays out. We're able to pocket Pretty good premium, $2.85 per share. So if it were caught away from us, then we would of course be selling this at a loss. But I'd rather collect that $2.85 per share just in case EQR continues to go down than just sit there at that $62.50 strike price call option and just kind of be waiting for that $1.37 over the next several months. Now our last trade was rolling the NEP $65 April 21st covered call down to 60. Again, we stuck with the same expiration day, April 21st. We just rolled it down by $5. We pocketed $1.66 per share. So here we see the chart of NEP, another one that's just got hammered over the past several weeks. And so again, we see really high, strong volume over the past month from sellers. We see again today, yesterday was a big down day. Buyers came back in and bought it back up. But notice that our volume yesterday on the big red down day was quite a bit higher than our volume today. But the volume today was still respectable, and it almost eclipsed yesterday's down day. So that's a fairly bullish sign. Now we'll have to see how the next couple of days play out, but this could be a reversal. But again, we're looking at a bearish chart here on the daily chart. Weekly chart the same way, fairly bearish chart. But this long leg here, it does show us that buyers got really interested in buying EQR when it reached this area right here around 57.5. So it closed out today at $61.53. We sold the $60 call option, so pretty close to at the money. It's a little bit in the money, but if, again, NEP kind of trades sideways over the next couple of weeks, this could end up being a really good play for us. And we pocketed an additional $1.66 per share. So that's our trades for today, and I hope you have a great weekend.